Sorry for all of you who are just vibing out to the music. Today was an interesting experiment to see how many people would tune in before I actually sent out the notification. So we're already up to like 50, 60 people, which is great. But good morning, everyone. Glad to see everyone back. Uh, Exciting times in the markets, I'm sure. Everything banking related. Let's get a couple people up here. Welcome, Latter Day, Nacho Monkey, Nacho Average Monkey. Um, Sorry, and just quickly for anyone who is getting excited about the earlier weight music, unfortunately, it's a little bit too distracting, but it is a banking tune.
That means I missed out.
Jefferson, you are not a statistic. Each and every one of you is very important. I love you all. But I love your plays more. So, what do we have for today? Let's see. For anyone
Well,
who. Oh, sorry, go ahead. For anyone who is bucking the trend and saying that for whatever reason Bed Bath and Beyond won't
I
go
can't hear anyone.
bankrupt,
Hold on.
uh, Bed Bath and Beyond was up 17, 20% yesterday.
How's everyone
So
doing?
good, good. Can you hear us?
I can.
Okay, excellent. There we go. What you got for today, Mindless? We've always got good stuff.
Always. Today, today I'm chilling. I'm here to absorb plays.
Excellent.
Good morning, everybody. So yesterday I picked up a put on SPY, 407 put, expiring 419. I picked it up for 33 cents. We'll see how that goes. That's one small play. But my big play is that expiring in July, I don't know the exact date, I sold about 40 Canopy Growth 1.5 puts. I'd expect I'm going to get assigned on them, but nonetheless, the annualized return, even if it's a slight loss on that assignment, it'll pay off in the long run. Anyway, thank you guys.
Oh, thank you. Interesting. Godspeed.
Morning. I was going to say morning, everyone. And just a question on that. Besides the general negative sentiment I know we have on the marijuana business, any reason just to do that? Just collecting premium off them, or?
So, yes, collecting premium. I was holding them. I sold them. Now I'm looking to get back in at a lower price. So that's one benefit for me. But ultimately, if I recall correctly, I recently saw something about them refinancing their debt. And refinancing your debt right now is pretty bad. I mean, interest rates are elevated year over year. So the fact that they're refinancing now is pretty bad. Yeah, that's just my thesis.
No, I appreciate it. I was just like hearing the reason why. Besides, I like the stock, which I mean, I get that too. Anyhow.
Ultimately, I would like to point out this is a half-baked thesis. I mean, I didn't do a full dive into their financials or anything like that. I mean, I did a while ago, and they had one quarter where they broke even on their gross profit, which ultimately isn't a big deal. But yeah, ultimately, it's a half-baked thesis. Do your own due diligence if you're going to follow me in this play.
J&J should be reporting right now. I mean, they should have already reported. Their earnings call is going on right now. I don't know if anyone had plays on J&J, but I mean, recently they tried to do this interesting maneuver where they had like all these talc. They had like a talc powder, and came out that it was surprisingly not healthy for you, and so they were getting hit with a bunch of these lawsuits. And they tried to do this legal maneuver where they diverted like all of their um, like legal like whatever part was legally liable of the company to a different company, and then tried to file for bankruptcy, which on the face of it sounds terrible, but is actually like not that bad, because they also gave it like I don't know what it's called, maybe a line of credit or some kind of contract, where if they were to get hit with a ton of lawsuits, they would pay out up to, I think, a cap of like $65 billion, which is not actually unreasonable for the damage they done, but quite significant. And then the bankruptcy courts turned around and said, "Oh, well, you can't do that because technically this company that you spun off isn't actually bankrupt. It's not almost insolvent because it's got the $65 billion line of credit, so, or whatever it's called." So they had to restructure the thing so that the organization that held all of the claims was like more bankrupt, seemingly. But yeah, the TLDR is that basically it was a way for them to kind of like get away from all the legal costs. I mean, they still wanted to pay people out, but they wanted to minimize, having to do individual lawsuits time and time again. So since that's kind of been a little bit of a mess, I think their legal costs have been a little bit higher than expected. But I guess we'll find out a lot more about that on their earnings call, which is like right now, which we could stream if people were curious. But if people have plays, wouldn't want to go over that.
Oh no, I'm a long time holder. I just never talk about that holding usually, but that's one that I've been watching, and yeah, it's the legal maneuvering. There's people in other industries that have tried and successfully have done this, and yeah, overall the market enjoyed that news last week. So I've seen a nice little run on that position. So, but I doubt anyone. Not a big options play. I think just for the cost involved too.
Yeah. All right. I guess last thing I'll say on J&J then is that they just beat earnings and revenue, raised full year guidance. They're up 68 basis points in a pre-market. But we can move on. I think J&J feels like a little bit of a boomer stock compared to, what are you guys talking about? MCB earnings, Nvidia, SPY. Oh, Marbled, you've got a lot of plays. You should come up here. I'll echo Marbled's plays just so he gets his time in the sky or sunlight. Nvidia 425 calls. That's for May 6th. Sorry, June 6th. SPY 373 puts for the 28th. Wow, that is a long way away. But you've also got SPY 435 calls for May 5th, which again, also very long way away. But at least they were hopefully cheap. And he's also trying to figure out why his old GME Jan Leaps flash launched 600%. And is asking if anyone knows. Probably if you're using a brokerage like Robinhood Marbled, the bid-ask spread just widened because, maybe some algo pulled its bid or ask temporarily, and then the price just shot to the moon because Robinhood just takes the midpoint. That's, in my experience, like 95% of why things flash. And the other 5% is, congratulations, you're rich or impoverished. But probably the 95%.
You didn't laugh, so that was meaningful. It was good. Yeah, I would have added evil laugh there.
Well, okay, look, Conscious Guru is asking, well, he's not asking, he's saying we're dumping when the market opens. So I'll pose the same question to you guys. Do you think markets go up when markets open or down? Currently, I think we are in the green. Let's take a quick look. Yeah, we're 46 basis points green in pre-market. And we've already had a lot of economic news come out, like building preliminary building permits were slightly below forecast, and I think that was the only major news we had, or the U.S. had. Canada had inflation rate. Kumar?
I think
No
beige
matter
spoke
how the
about
markups are. I was just going to say that no matter how the market moves, we know that in the last hour to an hour and a half, the market's going to pull that Uno reverse card and do the complete opposite of what it's done all day.
Based on what, or what you're thinking? Because right now chat is split. It's like literally 50% up, 50% down.
Oh, I'm just saying that based on well, certainly yesterday we saw that, and last week we saw that. I think it was 2 out of 5 days. But someone could correct me, but I do think it was 2 out of 5 days last week.
Ooh, interesting. All right, we got a lot of people talking about a lot of different stocks in the comments, but nobody really giving some flesh to it. So, what do you guys think about HAL, Meta, or TSM? Any of those three, very diverse kind of set of stocks. I guess I'll just ask, like, what the heck is Meta up to now that the VR play has, they've literally gone up like 140% since they announced they're not doing VR or the metaverse anymore. So they're still a long way from their 2021 peak, like maybe still like 40% down. But you guys think up from here for Meta? Because if they're no longer burning money on the metaverse, they're cutting down with layoffs, back to basics, pulling in something like $200 per user per Canadian US user. It's a good business to be in. Maybe not $1 trillion business, but right now it's valued at just shy of 600 billion. So thoughts? Well priced? Oh, yes.
Yeah, I just saw that they were trading around, it's like 20.9 or something like that, forward PE, which is still reasonable for a company that still has the growth at the size that they do. I've never been a fan of the company or the stock. So I think from here on out, it'll trade range bound. I don't think it's going to go crazy up or crazy down. It's probably in that fairly valued. With TSM, I'm still fearful of the war risk, if you will. I'm not saying that China is invading this year, but there's just too much and the unknown there. So for me, if I had to pick between the two, I would go with Facebook, just because it's a domestically owned one, even if it is a robot CEO. Ha ha ha.
Well, if you guys want
print cash, they still print cash, even with him burning cash. They still make so much money. So, and it's a domestically run one. So I would say there's less risk there.
Oh, I just found Meta's got a lawsuit that I think just closed today. So they got sued for privacy, breaches and stuff like that, with sharing all their details to third parties. And as a result, they're paying out, if I'm reading this right, $725 million after fees and expenses. And you, my good friends who live in the US, can get a cut of it. Just fill out, I think this is the form. I know it looks sketchy, but I mean, you guys can also just Google it. So,
man, gonna get $150 in this class action lawsuit. Hell
well,
yeah.
Okay. I've actually been part of some class lawsuits that have paid out like in the hundreds of dollars. So it might not be worth. It might be worth your time. $725 million, split equally, and there's like 300 million people in the U.S., but like maybe like a 1% is gonna look at this lawsuit.
25 cents.
No. Wow. All right.
No, but
If
the
you
thing
guys
is,
don't want
But do you get paid out per the person or per the profile?
No, it's per the. Yeah, I looked at it. It's like even if you had multiple profiles, just one user, one person.
But I'll echo what Opinion said. Just being part of a class action lawsuit, it's not hard, number one. And number two, yeah, you just get like a random, if you haven't been involved in it, sometimes you just get like a random, like legal looking envelope. You go, what's this? How do they know I bought this? Sure, I'll do this. And then you get a check for, yeah, sometimes it can be in the hundreds, but it's interesting that they're going to have to pay out. But it's, yeah, I read somewhere, it's, yeah, even if you say everyone's got one, it's like $2 per person. So have fun with
Opinion,
that.
are we certain this website's legit? This Facebook user privacy settlement.com thing?
You should
All of
you should
you should
look it up in other sources, but generally speaking, when a class action settlement occurred, the settlement administrator will build a website uniquely for the settlement. So it's not surprising that it's not going to be on like Facebook. It's not going to be
No,
housed on some law firm's website. It's going to be its own thing.
I assumed it would be its own thing. I just want to make sure, since it sounded like Opinion put 7 seconds worth of research into this and then put it in the chat, that we're positive this isn't just like some guy right now is running a scam and it's just like, oh man, this really worked out.
They're like WallStreetBets class action lawsuit scam run by. Never mind. Sorry, Opinion. Go ahead.
Speaking of which, by the way, ever since Opinion turned off the buy button for GME, I do have a class action in the process. We're going to take 1 jelly bean per user from Opinion for this heinous crime of turning off the
Oh,
buy
God.
button. So
That's so many jelly beans.
it really, it doesn't seem like much, but when it's millions of jelly beans, good luck, sir.
How many stones is that in jelly beans? No, I'm just kidding.
All right, I looked it up. A jelly bean weighs 1.1 grams with a standard deviation of 0.2 grams. I guess you don't need to care about the deviation because you have so many. So law of large numbers. And we got what, like 14 million members? So that's 2 kilograms, pounds? You guys use pounds, right?
Yeah, freedom units. Yeah.
That is 34,000 pounds. How much does a car weigh? That's Cybertruck weight.
I mean, that's a lot of shipping.
I mean, that's like 5 Cybertrucks worth of jelly beans. So
This is why you do it in jelly beans, people, because they don't think it's a scary amount until they actually do the math and then they realize that this is how you punish them, because now he's got to buy all these jelly beans and then you get calls in the jelly bean company. This is the big brain play, folks.
No,
This is
I
how you
remember
make
this
a
in-
living.
I remember
you
this in
make
business
him
class.
personally address and stamp and lick the envelopes.
I see a message coming up in the Discord server. Hey, jelly bean friends. I need your help.
Oh God.
All right, not to distract us from jelly bean related compensation, which is very important, but are we interested in hearing about a company that actually makes money beyond the jelly bean related industries?
Sure, we'll hear your mining play. I like it.
Oh no. This is gonna be so out of left field for me, but here we go. Well, not super out of left field because it is way in the future, so at least that's part of me. And it's gonna be General Motors. Wow, like a company people have heard of. What the hell? Must be a new person here. So here's the thing. Starting in 2024, that $7,500 tax rebate that you get in the US for buying an electric vehicle is going to switch from a tax rebate to a point of sale rebate. What that means is starting in 2024, for vehicles that qualify, you can take that rebate off the actual sticker price at time of purchase, and the dealership then takes the rebate for themselves. So essentially, starting in 2024, for vehicles that qualify, and I'm using vehicles that qualify because the conditions are much stricter in 24, you're essentially getting your vehicle for $7,500 less at purchase. So why am I saying GM? The Chevy Bolt right now has over 200 miles of range, which usually hits most people's desire, and is only about $27,000 to $29,000. So you're getting, in theory, a 2024 EV for under 20 grand, which puts it right in line with like your standard ICE vehicles. You're now matching up to like a Toyota Corolla, a Honda Accord, right? You're in that price range. I'm getting kind of bullish on them if they qualify for that. And again, the standards are going to be harder, but it's anticipated Chevy's going to hit that that price pull off is going to make them cost the same as all the other ICE vehicles, and I could see GM getting a bump from it. So that's my yes, it's next year, but keep an eye on it play.
They have to mine more to make those cars, so I'm going to say it's a mining play.
Stop it. Everything is a mining play. Everything. The jelly beans are a mining play.
Sugar, right? Or farming. I don't know. Anyhow, my so my only counter argument, it's very base, but I think the Volts are ugly. I mean, they just are. So while that is a good entry point for people, I think a lot of people will still look at it and go, but it's ugly. So
to keep it more Wall Street Bets related, because I know you guys like your specific companies, Tesla's also anticipated to get the full rebate next year. So it would also be about $7,000 less for your Model 3. So if you want to be a Tesla bull, you can go scream. This is going to make Elon all the monies.
Honestly, GM's done better than Ford, if you want to look at that. I think they've done better with getting into the EV space. So to counter my counter, they also, they probably have that lower entry level where I think Ford still concentrates on the trucks and the higher entries. So it could work out.
Well, that's what I got, unless you want. This company is currently looking for gold and pebbles in the middle of Alaska or something.
Don't forget about the dildo mining company.
No, they're trying to mine uranium. They're just funding it through dildos. It's different. And I actually looked into it. It's not dildo exclusive. They're doing all sex toys and sex related products. So it's Pornhub presents uranium mining. It's much more diversified. Someone in chat asking if you can invest in porn. Grinder is publicly traded, so does that count? I know Opinion has been doing a lot of ground research on Grinder for us. We're waiting for him to write his DD so far. Last I heard, he said that while he is over 250,000 hours into his research, he still needs some more time before he can really give us feedback. So, thank you for your devotion, Opinion.
No problem.
It's not porn, but it's kind of close. Rick, R-I-C-K. They own a number of strip clubs.
They're also have been a pretty aggressive business. They pretty much spent the entire pandemic going from like small local strip club to small local strip club and just buying up anyone that was like going out of business. So they've expanded a lot.
Yes, surprisingly, Dix is not a porn company. Unfortunately, sorry to disappoint Alp.
Not with that attitude.
With what attitude would it be?
Everything's a porn company if you just believe opinion. You just have to have imagination, all right?
All right, all right.
Look, all I'm saying is opening scene, excuse me, sir, I'm looking for a 5-iron to improve my game. Go from there. Thank you.
um, Netflix is reporting earnings after hours today, which is kind of exciting. Very curious to see how their ad-supported tier is doing. I know a couple people anecdotally that have used it, but I wonder if they're getting enough revenue from ads on their ad-supported tier to justify it, and if it's not, hopefully not cannibalizing their other offerings. But to be honest, like I've watched a couple of shows on the ad-supported tier, and it is actually really disruptive. I can't believe we ever had cable where we like literally had ads like this all the time because it is annoying. So I have the sneaking suspicion that it's not going to cannibalize as many users as people think.
So what does Netflix have right now as far as show? Like, I know like Stranger Things, Squid Games will come out, but right now, today, what's new on Netflix? I guess let's say in the last 3 months, what's come out on Netflix that's going to get someone to be like, oh man, I need to be on Netflix? Because my understanding is most people just kind of play musical streaming services depending on which one has the shows they care about, right? That's how a lot of people run it. So what's got people coming into Netflix at the moment?
Not sure off the top of my head. I mean, I can name a couple that just search, but they all seem like no-name things to me.
Yeah.
Because they are, right? If they're new, then they haven't really proven themselves yet. I think one big area for growth though is them actually making movies that then appear in theaters, like uh, the Dungeons and Dragons movie, which was a flop, was actually made by Amazon Studios. And I've seen a couple movies in theaters that were made by Netflix, so it's an additional revenue stream for them. I think that I'm curious to read in their new filing if they're finding that that's profitable or something they want to invest further in. Here,
Yeah,
let's see what.
it sounds like they have, quite a few TV series going on. Like someone in the comment, they put Love Is Blind. That's like their most recent TV show that people are talking about. But it's not anything crazy. There's similar shows like that on Netflix that people are watching, like relationship ones. And then of course there's the Wednesday TV show. There's Beef that just came out, but these were all like
Oh,
one season. You know what I mean?
well, hold on. So they've tried to, by the way, in their history, do a couple different things. Like I think at one point they were like trying to get into gaming, but actually this weekend they tried to do another live programming event. So it was called Love Is Blind. I didn't really know about it. Like I heard about it during on the Sunday when it like launched, but apparently there was like some technical issues. But I'm curious to see if anyone like in the audience like was part of Love Is Blind or knows anything about it. Oh, it aired 2 hours late.
Yeah, so it was supposed to be 8 p.m. Eastern time, and then they were like, "Oh, it's going to be on shortly in 15 minutes or something like that." And 2 hours later, it finally like went on, but it was a mess. I thought it was just like they were hyping it or something, but 2 hour delay, yeah, that was some serious technical issue.
So I'm not trying to like knock Love Is Blind or anything, but again, when it comes to the streaming services, like for Netflix, it's Stranger Things, right? A new seasons of Stranger Things come out. People sign up for Netflix. They want to watch Stranger Things. Squid Games 2. People are going to sign up for Netflix. They're going to watch Squid Games 2, right? The next like Cyberpunk or Arcane, or if they can get another one of those like animated type shows, that will get people to sign up. They kind of have like their flagship series. And I'm just trying to think. I don't think they have any running right now or any like coming up. Like I don't think Stranger Things season, what is it, 5 or 6 now? I don't think that's coming up in a few months. That still is a long time to go, right? Same for like Squid Games too.
Yeah, exactly. So that's what I was saying. That some of these seasons, there's either like season one that just came out that were popular, but then the delay to the next season is pretty long, and then the following new season of Stranger Things and the other popular flagship ones, there's a delay on those too. So you never really know when they're coming out. There was one too for like I think it was like I can't remember which one it was. I got to remember the name of it. But then you have like your Adam Sandler movies. He just has one with Jennifer Aniston. He had a big deal with Netflix, so he's drawing. Adam Sandler's drawing in a ton of crowds to Netflix as well.
So it sounds like the answer is right now they don't have that flagship show the way that HBO just had, like a Last of Us that just kind of wrapped up, bringing in a bunch of people. Or I think Apple TV has a new like Ted Lasso season that will pull people in, right?
Yeah,
And I think and I think what you were saying earlier, opinion about the ad tier supported thing, and then the no password sharing. I think that's going to probably be the main topic for this earnings call. Not that they want it to be, but having to put that tough love out there. I want to see if they even got any revenue growth from it. Do you have people that are opening their own accounts versus sharing the passwords? So,
I mean, I'm gonna be honest. I have a shared Netflix, but if they said that like I couldn't use it for password stuff, I would just stop using it. I really don't ever watch anything on Netflix. I feel like there's never anything out.
and see, I'm curious if it's going to have that negative effect, where they're trying to, I don't want to say create more users, but they're trying to close that loophole. And I want to see if it's this anecdotally you saw it on social media. A lot of people were not happy about it. Does anyone have any positions on Netflix? I am not currently holding.
If I was gonna go streaming service, I'd go Warner Brothers Discovery personally. Especially now that they're planning on making like a Harry Potter TV show, I think it is. That's the one I would go if I was gonna go long on any of them.
Yeah, they signed that up for 7 seasons. That's a huge contract.
Doesn't have to be good. It just has to be Harry Potter. It'll get views.
Yeah, it's not like it's an untested platform, if you will. You are right.
I mean, that's not really true. Look at Amazon and Lord of the Rings. That didn't really go well with them.
So I see people in chat bringing up Disney Plus, which yeah, there's nothing wrong with Disney Plus, but there's no way to like invest in just Disney Plus. You have to take all of Disney on at that point, right? And then Disney Plus is such a small fraction of that.
It's a shame Hardy hasn't shown up yet.
So I'll bring up something that's ancillary but important to the group. Today's tax day. So if you guys haven't paid your taxes for last year, go pay your taxes or take your losses. I brought it up in chat earlier, and someone's like, "Oh God!" So I hope no one else is having that "Oh God" moment right now. But yeah, it's today.
And in other news, Tesla earnings tomorrow, and the SpaceX Starship launch is on 4/20 now, according to Bloomberg. So true to form, Elon postponed the launch till 4/20, so that should be interesting.
So, not quite sure what I want to do or if I'm going to do anything with this, but I was looking at some dividend plays last night for an assignment I had, and then I came across ABR, which has a fat 15% dividend, and it's a real estate REIT, and it's beaten down pretty badly, and it's looking like it could potentially be a good entry price. But if we are headed towards recessionville and the housing market's going to collapse, that would not be a good one to be in. So I'm trying to decide, should I go for puts in August or just not touch it, or maybe should I just go long on shares?
I'm not familiar with them. Oh, go ahead, Gino.
Sorry, what was that ticker again? Alpha Bravo Romeo, ABR?
Yeah.
Man, do not chase yield, especially when evaluating REITs. It is a recipe for absolute fucking disaster.
Yeah. I was looking at what's their makeup here, and they've got a lot of rental portfolios. They've got also a lot of HUD and GSE government sponsored enterprises. So you could see some of that income as a constant. But I have to agree with Showtime on any stock, let alone a REIT. But if it's gone down as much as it has and the yields, doubled or tripled in the last year, a lot of times the dividend is usually at risk for any kind of company like that, let alone regardless of economic conditions. So, but yes, and if we're approaching a recession, could they have, and a rising interest rate market still, they could still have issues. So I would be negative on it. Or here's another way to look at it. So the yield's 15%. That sounds awesome. The stock's down 40% year over year. So your return's still really negative. So just another reason why I would not be chasing it. The Showtime pointed out.
Yeah, that was some of the stuff I had looked at as well. It's still up, I think, 20% if you go to the 5-year chart. So that also means it's been down worse, which is why I was like, maybe I shouldn't touch it.
I'm not. I'm actually in the car, so I can't pull it up. But I did look at ABR. Like, I have a very extensive REIT portfolio, and there's only one that I really like, and that's Iron Mountain, which is the ticker IRM. But ABR, like, there's a reason why it's down so much. There's a reason why, like, it's not a good investment. They're just the risk that they're facing. Their properties are terrible. It's just not a good time to invest in them. And like somebody pointed out, like they're already down 40% for I think in the last 12 months. So that's why it's a 15% dividend.
And I've also brought up Iron Mountain on this talk many times. I like them too. It's a specialty REIT, and it's basically just document storing, if you will. And also they do some shredding services, but that's very minor, but it's mostly document retention, lifetime for most of the stuff on financial, medical, school records. So, and they pay out almost a 5% yield right now. So I like them as a REIT play in my portfolio. It's a specialty REIT. It's not really renting space. It's storing documents. Morning, Skull. How you been, buddy?
Good morning. I've been incredibly busy. Since we're talking about REITs, I just want to plug RWT. I'm a big fan of this stock. I'm a big fan of acquiring it at $6 or below. I have a lot of shares. I'm just going to say that. And they pay out a very nice dividend. They own, if you guys have ever seen near you, if you've ever seen something called Redwood Commons or Redwood Apartments or Redwood whatever, that's actually owned by RWT. They own 265 different apartment complexes across the entire U.S. They also have their own REIT arm that does some more classic style REIT plays. But I like these guys. And again, anytime it gets below $6, I look at acquiring additional shares. And I just now noticed that I do indeed do that. The more excited I am about a play, the faster I talk. That is kind of funny.
Yeah, you were really.
Me in general.
Well, also my Adderall and Abilify are both kicking in right now, and it feels like, I don't know if you guys play Fallout, but it basically feels like I just took some jet, like time's moving super slow, my body's moving super fast. It's always great getting up in the morning. Is Folgers a publicly traded company, or are they a brand under Procter & Gamble?
I think they're under P&G. I don't have them in my house, but I'm fairly certain they're owned by them.
I wish they spun off some more of these consumer brands into their own tickers, because whenever you go to look at a play on a consumer brand that's doing well, it turns out to be owned by P&G, Unilever, or Nestle, or Johnson & Johnson, right? There's never some standalone product that you can buy in a store that's not part of a giant conglomerate.
Well, good news. This is an Ohio stock, Skull. This is J.M. Smucker, actually, owns them. So still a conglomerate, if you will, but they own Gift too, and Dan's and Folgers, apparently.
So you can have some peanut butter with your coffee?
Are there established products in America at this point that haven't been like bought and combined into a company? Other than maybe like some very new things? I feel like isn't that kind of the ultimate thing? Like if your product is actually any good, someone just winds up buying it and adds it to whatever they do.
Yeah, and a lot of it's through competition too. I mean, I'm sure I'm not the only one who's watched that stuff, but like the Food That Built America or the Industries That Built America on the History Channel talks a lot about this, where you get people backstabbing and stealing recipes, and then they end up usually buying not necessarily the weaker one, but usually someone gets bought out. It's somewhat the American dream, in a little ways, right? Maybe not the backstabbing, getting bought out by a larger company.
Unless it's like some niche organic brand, I don't see them like not being owned by some huge conglomerate.
Yeah, there was also a giant acquisition spree in the CPG space from 2008, a little bit after the meltdown, until about 2016. I mean, they just went gangbusters on the consumer packaged goods space. Lots and lots of buyouts, lots and lots of consolidation in that space. Everyone from venture to private equity to, people just buying on the open market. So, that space.
Funny you should bring that up. I was gonna say, funny you should bring that up. Folgers was bought in 2008 by Smuckers. So yeah.
Interesting. Yeah. No, I know some people that worked in that space for decades, and that was when they sold their businesses within that time frame. So I'm seeing something interesting. This is not directly related to stuff, but I'm starting to see venture capital get a little bit. It's starting to normalize again after Silicon Valley Bank and everything else. I guess the reason why I think this news might impact markets is if venture is starting to throw money in the market again, it means that there's once again a little bit of an appetite for risk on assets. But also, a word of warning, other than in 2021 when venture went full regard, it's typically been counter-cyclical with the markets, which means the more the market slows down, the faster venture is injecting money into new startups, right? Because they can't, it's harder to make that return in the traditional market. So people start looking at venture more. The venture funds end up getting more money from big investors, and then they end up having more money to assign in checks. So this has been a counter-cyclical effect since the 2009 meltdown, with the single exception being 2021. So the venture speeding up might be a sign of increased risk tolerance, but it could also be a sign that we're in for some more rocky times. Personally, I think it's a sign that things are starting to look a little more bullish in the market overall. Smart money starting to get back in.
I mean, the VIX is also down at 17, 16. That also speaks to some calmer waters ahead, right?
Yeah, the challenge that venture is posed with right now is pretty unique because, they normally try to go for these multiples, but right now interest rates are so high in bonds and other risk-off assets that you look and say, well, we could invest in a startup, or I could put $100,000 in bonds, right, and get the same return over 3 years, right? It's a dicey time to be in venture right now.
Yeah, that's why I was trying to. Yeah, that's why I was trying to figure that out. I'm like, well, there's a lot of other choices now. So what does that risk appetite mean? Yeah, is it they're not looking for yield per se. They're looking for growth there, is what I'm hearing, right?
Well, yeah, they're always trying to look for that 10-bagger or that unicorn that's going to make, a small percentage of ownership be a $50 million bag, right? Like, there's some big companies that have gone that way. But getting back to plays, let's talk about AI for a second. SOUN, SoundHound. That's ticker SOUN, SoundHound, AI. Take a look at this, guys. We got earnings coming up here. I have my basically my sentiment analysis bot, which looks for mentions across Reddit. It also looks for mentions across Twitter and across StockTwits, and it just takes the average volume of the number of mentions. This thing's starting to go up. The last time I saw this kind of volume on it, it had a little bit of a pump. So be wary. This could very well be a coordinated pump and dump by folks. That being said, I'm willing to ride the wave. Also, speaking of getting a general temperature of the economy, I don't know if Opinion's on here and listening or not, but if he is, maybe we should have that interview with Rick at some point.
I'm still waiting for the in jail phone call with SBF. Personally, I was very hyped for that.
Dude, I can't believe that. I was on that Twitter space with him. I was the one that was talking to him on that Twitter space. I was like, come over to WallStreetBets, and now he's like, now he's ghosting everyone. I guess his lawyers finally got to him and said, hey, shut up or you're going to go to prison forever, probably.
Could you imagine being his legal team and he did a WallStreetBets Ask Me Anything right then? Oh my, I would just tear up the papers and be like, I'm done, I'm out.
If I had to tackle him to take his VPN, be like, you need to stop this. Definition of his own worst enemy, right?
I think it was just a prime example that he did not realize that anything he did might be illegal. Oh, so Scald,
oh, go ahead.
I was gonna say I did some digging into Pure Cycle because I know it's your favorite company in the world, and they're gonna remove all the plastics from every single water source in the world, Scald. They're just the world's greatest company. They're gonna remove all plastics and recycle it and just save the planet, man. This is the future.
Interesting. I guess step one would be getting the water permits hooked up to their plant here in Ohio, because I think factories require water. Last I checked. I don't know.
They're planning on. They said they did. They said they're building.
They did eventually get those permits. Yeah, they did eventually get the permits. By the way.
Now they just need to see if they have enough time to last out their 2 months worth of funds.
It's very true. And, I think a lot of these small caps and mid caps just aren't used to the level of scrutiny that a couple hundred autists can bring onto their books, right? Like, next thing you know, I'm pulling permits to see if they got water hooked up to one of their plants that they supposedly opened. Who does that, right? I mean, that's why I like talking here and I like hearing from y'all, because some of the DD I get here is stuff I never would have even thought of, and I do think that there's definitely value out there to be found in the market. You just got to look under the right rocks to find it. Yeah, my play on Pure Cycle is that they're going to zero. That's the short of it. They basically had, get it, the short of it, dad pun there. Sorry. But basically, they had so much money from their IPO that I wasn't able to short them for over 2 years. They just sat on my short list and I watched them. Also, if you Google Pure Cycle, there's a Hindenburg report out there. Love the guys over at Hindenburg Report. They do just great research. I met one of them at a cookout not too long ago. But anyway, the Pure Cycle, they did a report on them in 2021 and said, hey, basically this is a bullshit company. And they outlined in 54 pages why. I think WallStreetBets is now familiar with Hindenburg Report, the Adenine thing. So this was an older Hindenburg play. The problem was they raised so much money in the IPO that they could just shovel money into the fire for months and months and months, and years have passed now, right? But guess what? They're coming to the end of it. They're coming to the end of all that money they raised for the IPO, and now it's time to put up or shut up, and their revenue is not looking so great. So we'll see what happens.
So I will openly say I have August puts for them at $5. I don't know if they're going to go under by then. I doubt it, but I think they're going to have to do a capital raise and dilute the hell out of their share price. So we'll see.
Yeah, maybe I'll just reach out to their CTO since he's responded in the past, and I'll be like, hey, I'm asking for the Wall Street Bets morning chat. Would you like to give a statement? He's going to feel like, no.
But if it's the inverse of what we do, if we're negative on the company, he should want to come on there because then his stock will do well. That's how you got to sell it.
Speaking of inverses, what happens if Jim Cramer says to buy the inverse Cramer ETF? Does the market have to shut down for the day while they sort that out? How do we handle this moment?
Like dividing by zero.
Do they just have to shut everything down and be like, all right, guys, he finally broke it? Is that going to be his final FU?
No, he'll screw you over on your puts at first, going up, and then after it goes up, it'll screw you on the nothing. You sell them.
Somehow the IV will always manage to make all sides lose.
Pretty much, yeah. That's what would happen. And it would stay open. He's like, I guess it's not that bad.
Oh, just to wrap up Pure Cycle real quick, for those who didn't know, Scald hates them. Loose was also on here about 3 weeks ago, pretty much saying exactly what Scald said. But he actually went into their books and saw that, like, I think at the time he said they had, like, 3 months worth of cash on hand remaining. Loose did a lot more.
Yeah, Luce came on here looking for a place to short, and I was like, buddy, do I have one for you? And I showed him Pure Cycle, and then he did the math and figured out exactly the day that they're going to spend their last dollar. Very impressive work by Luce there, figuring out exactly when they're going to go to zero.
Yeah, those August $5 puts are his. He was like, oh yeah, they'll be screwed by then.
Market's open.
I'm just excited to finally make a play on this thing. It's been on my short list for years, literally years.
Man, it's not a bad time, right? Either the company sucks, or if we just get a recession, they'll go down anyway.
What's the ticker on Pure Cycle?
PCT, P as in Peter, C as in Calvin, T as in Tango, PCT. The only other thing I've watched for longer for an opportunity to short has been SeaWorld, because seriously, fuck them.
Rad, what was the expiration for your $5 puts?
I have them set to August. If you want to go further out, you can. And that was just what... This was off of Luce's math. Pure Cycle I've known has been garbage for a while because Scald brought it up, and I've been paying a bit of attention, and yeah, they're making a lot of claims, but it sounds like those really crappy mining companies that I pay attention to that I know are going to go under. And then Luce did the math and was like, sometime before August, they should be out of cash.
So, the $5 puts for August are pretty expensive now. It's a whole contract.
Right?
What?
They're 90 a contract. They're like 90 a contract, right?
Well, so the bid is 70 cents a contract. The ask right now is $1.10.
Yeah. So if it's at, I mean, you can probably get in there around like 90, make it work.
So yeah, the whole contract would cost you $70 to $110.
I mean, you can try a stink bid at 70 and see if you can get it filled. Probably won't, but you know.
Well, I just half of my cash balance just went to buying some more shares of Nintendo, so now I'm at an even 200 for Nintendo.
When are we getting our Nintendo Cinematic Universe? Is Nintendo ever going to capitalize on this? Make a Zelda movie, make a Pokemon movie, make a Mario. They already got a Mario movie, I guess, going. We can get a Super
Well, I
Smash
mean,
Bros. Movie when they
Mario
combine.
just came out.
They've been making Pokemon movies forever, but the problem is they don't have full ownership of Pokemon. So I think that's what the issue is. So they're only getting a small bit of money.
Like we could have them all combined into Super Smash Brothers for their like big Avengers pair up. Come on, Nintendo, let's get this made.
Oh gosh, that could be interesting. But yeah, I'm interested to see. They have earnings. I think May 9th is when they're supposed to have earnings, and it'll be interesting to see what they say about how well the Mario movie's done. Because I've heard it's done extremely well in the theaters.
I've heard it's fine. Maybe I'm just weird, but I just can't get over the fact that the voice actors were flat out told, like, don't even pretend to be those characters. Just be yourself, who like cosplaying that character and call it a day.
I mean, I haven't seen the movie yet. It's on my things to do list for sure. But
Like, have you seen the commercials and heard their voices? They literally, like, they don't even change their voice. They're just talking as themselves.
I mean, I feel like Jack Black, like his voice in general, actually fit Bowser very well.
Yeah, he's a walking cartoon character, so yeah, he's yeah.
Yeah, it'll be interesting to see. Google opening down again, but not as bad as it was yesterday. So we'll see how and if it recovers.
Oh, continuing with plays, even though, again, my plays are always long and boring. I'm slowly adding save shares, which are Spirit Airline, because they're still going to get bought by JetBlue, and it's still a little under double the price it's at right now. Yeah, there's some challenges to it, but there's always challenges to these acquisitions. But if it goes through, I'll sit on some shares to see if that happens and make a good return on it. But that's a very slow ad here and there. I'm not running into that one.
And Bath and Beyond up 10%.
The store by me still insists they're not closing down, so I'm checking every now and then to see when they're gonna have their like 80% off flash sale.
So I've brought these up before. I'm going to sound like a broken record, but I still believe in Northrop Grumman, NOC, and Raytheon RTX. They've been treating me well since I bought both of those. Haven't added to it just because there's been so many green days here, but it's been a nice addition to my portfolio. Still pro defense stocks and still think contracts are going up.
I like it, but if that Ukraine war ever ends out of nowhere, I feel like all those defense stocks are going to get crushed. Which, funny enough, is probably when I will look to jump into them because they'll probably get oversold to hell because people will act like war is now over forever.
Yeah, and I've already, in my mind, I agree with you. I'm going to pretty much double down, not on all of them, but I plan on it. That's kind of my idea. I don't necessarily have that much cash sitting there right now, but I expect the contracts to go up even more afterwards, regardless of the outcome, because I don't think tensions are going to lessen anywhere else in the world. But you're right, there's definitely a headline risk for that. Maybe in the next, I would call it 2 to 3 years, just from the intel we have out there. But it could be, you're right, something could happen, but this year it could end. But it's, from what you hear on the ground, it's still at a stalemate, and it will be for quite a while. No one's come to the table.
I mean, the truthful risk for all those plays are Putin falls out a window and then the war ends shortly thereafter. I don't think that will happen, but that would be like a risk, right?
Along the line, if he sees a movie or TV show with Volodymyr Zelensky and decides, you know what, he's not that bad of a guy. Let's stop fighting against Ukraine.
There's actually already a video from like a decade ago where Putin was actually in the audience for Vladimir Zelensky doing a stand-up show. And he was having a good laugh. But, you know, times have changed.
And again, no matter what happens, I'm just thinking of Pratt Falls right now, but no matter what happens, I don't think tensions are going to simmer in the next 5 years.
I think your play is perfectly fine. I'm mostly just pointing out that there's always that slight risk, but more so if that war ever ends, I feel like those stocks are going to shoot down, and that would be a great time to jump in long.
But they've already built up China as the next nemesis. I mean, they're already pumping the fear, man.
China's not.
You got to keep in mind the military-industrial complex. They didn't get this big on accident.
And I always used to say this in business school, but it's kind of carried over when everyone complained first about like $3, $4 gas, you know, in the early aughts. It's like, buy Exxon, buy Shell, buy whoever you want. Let's make some money off of it. That's kind of the way I am with the war complex. And you look at the budgets of the US especially, but the rest of the world, it's going to become a larger line item. It's not going to go away. It's what props up the dollar. It's, you know, it's not gold, it's our missiles. So invest in missiles.
Scald, don't you have some of the German, I forget what it's called, the one that provides the metal for the tanks? Don't you have stock in them?
Rheinmetall. Yeah, Rheinmetall is part of the German industrial complex, and it has just gone on a tear. I mean, it went up for 3 consecutive months continuously, and then I bought it, and then it just kept going up. They're in their 7th month now, I think, of just slow and steady gains, right? So Germany, to put this into perspective, Germany was like 17th in defense spending or something like that, as far as how much they spent on the military. With Germany's new budget, they are now number 3. So it goes the U.S., China, Germany, Russia. So they went from 17 to number 3 real fast as far as how much money they plan on spending. It's almost to the point where they've allocated more dollars for bullets than they have bullets to buy. I mean, it's pretty amazing. So we'll see how this shakes out. And every year that this war continues to go on, the German people are going to be more and more interested in militarizing because, you know, they were once under Russian occupation for many years, and I don't think they're going to do that again.
And here's a really weird idea. It's not weird, but it's just a weird concept to think of too. A lot of the microchips and a lot of the pieces and parts, and I'm just going to say Russian because that's who we're fighting a proxy war with right now, and a lot of our enemies, we sell to them too. So the American military complex makes money on. And I apologize. Someone was asking about Lockheed Martin. They definitely, in the chat a minute ago, I apologize. I did see that. I like them as well. They've got a very similar, I would say them and NOC kind of run in parallel. They are the two juggernauts in the group. So, and with both of them, it's not just the actual armaments too. It's the planes and building and all the other pieces. So I do like them as well. They have very similarly run its share price and everything in yield too. So, but it's a little more different. But again, those are probably the two biggest in the space.
Yeah, and since we're talking defense stocks, I just want to shout out Noah Elderberry. He wrote a DD last year called Foreheads on Warheads, or Warheads on Foreheads, one of the two. But he did a deep dive, and he went through and he basically spelled out what percentage of the 2023 federal defense budget every publicly traded company was going to be getting. And it was one of the deepest DDs I've ever seen, and he did the entire defense sector. It was amazing. So, Warheads on Foreheads. I think it's still up on WallStreetBets. If you guys just search that, and then it also links back to a blog post where it's the same content, but he put it up on a blog as well. Pretty good, detailed due diligence there.
Someone in the chat brought up TDG. I have not played them before. I know they're more in the they're more deemed like the aerospace more, but again, right in that space. I don't know if anyone else has seen them. There's quite a few, and there's quite a few subsectors within the defense sector even. Again, not unlike a lot of the other companies, they look very profitable just looking over them here for the first time. No dividend, which is a little different, but it's probably because it's a newer company where the older companies have right around usually about a 2% yield. So if you hold these in your retirement-based accounts and just do a reinvestment plan, they also help grow over the long term. Another reason I like them.
So I'm bearish on Disney. I was bullish on Disney for a long, long time. I'm now bearish on Disney. Starting to think flood spoilers, right? That it's going to go down. Big downsies in Disney's near future. I thought they'd be turning it around. They'd be coming back for me as a Disney back holder, and that everything would be good. But I recently learned that not only did they lay off their metaverse team, which I could give two shits about, but they also killed their next generation storytelling team. And that's probably the most innovative initiative that Disney has had in many years. And the fact that they killed that shows that they're moving away from the principles that made Disney a good company, right? Which was the whole ideas of Imagineering and what that meant. So, I'm just not entirely sure I believe in the thesis anymore if the company doesn't believe in its core mission anymore.
No, you scold.
You know how many people are at the parks, dude?
Doesn't matter. I know the park should doing well. I know financially it looks like they're doing well right now in the near term, but what are they going to have next year? What are they going to have in 2 years? And I'd be more than happy if they come back and pick up my bag sometime in the next 12, 18 months. But I'm going to be honest, if they don't have some kind of, one of Disney's things has always been that they've been innovative, right? And if they're killing the innovative programs internally, that doesn't look great. What new attractions are going to open in the parks? What new material are they going to put out digitally? I mean, I guess they can just continue coasting on the Star Wars and Marvel IPs until those horses have been thoroughly beaten, but I'm looking down the line and seeing, well, what are they going to do next, right? And it's not clear to me what they're doing next.
Do you think maybe they're just taking too much meat off the bone with the recent layoffs? Maybe they do have some other ideas. Maybe they're called some other things because they've had some reorganization too. The whole year of efficiency, if you will. Do you think maybe it's just a short oversight, or you really, really think this is just they're cutting off their nose to spite their face?
I mean, it could be possible that this is just, getting back in the saddle and undoing some of the changes of the previous CEO. But the next generation storytelling team was loaded up with senior executives from places like EA, Activision, Blizzard Activision, places like that. And it was focused on not just necessarily making games, but making like digital experiences. And I thought that they would have, I thought that would get some traction over the next few years. And the fact that they're abandoning that initiative is, I don't think it's good, in my personal opinion.
No, I appreciate that. And I've been negative on Disney for a while. So I just think they've spent too much money on all the enterprises, and they brought the guy back who spent too much on the enterprises in the first place that they acquired. So
I think it's hard to make that. I think it's hard to make that case. I mean, they acquired Star Wars for $2 billion, right? And they made 10 off of it. They acquired Marvel for $4 billion. They made 30 off of it.
What about Fox, when they bought, or 20th Century Fox, when they bought that?
Yeah, I mean, to me, they're still in the process of monetizing it. I mean, we got to look back at Fox 5 years from now and say what's happened there, right?
No, I guess that makes sense. I appreciate that.
My thing isn't necessarily that they made bad plays in the past. It's that there's only so many billion-dollar IPs sitting around waiting to be acquired, right? It's a lot like the CPG thing we were talking about earlier, how from 2008 to 2016, all the brands got gobbled up by conglomerates. Well, all the IP, all the intellectual property, has been gobbled up by Amazon and Netflix and, all these other streaming companies. And it's like, okay, I get that Disney had great luck with buying intellectual property, applying the Disney magic to it, and just pumping out cash from it. But what are they going to buy? I mean, name another IP that's as large as something like Marvel or as large as something like Star Wars. I don't think there's one out there. And,
aren't they about to sell their stake in Hulu as well?
Oh, that's news to me. I've heard I heard some rumblings about them divesting from Hulu, but it didn't make any sense to me because, why did they do that in the first place, right? Their streaming service is Disney, Hulu,
Yeah, I was shocked to hear it too, because I was like, wait, I thought the whole plan was that you were going to acquire it and then combine it with ESPN and all that fun stuff.
Right. Well, and they did offboard all the Marvel IP from there, some of the other IP from there, but I thought Hulu. Okay, so for those of you who know the history of Disney, you know that they have imprints that they publish things that aren't classic Disney. Like, for example, Miramax movies, you would have some R-rated movies and stuff come out from these guys, and, they didn't put that under the Disney name, right? And so my thought was that Hulu was going to be like that for streaming. So it's like, well, this isn't really appropriate for the Disney brand, but sure, we can drop this clone of Rick and Morty onto Hulu, right? And not affect the Disney brand. So I thought as a brand strategy that Hulu was going to be the place where they dumped all the more risque content and the stuff that maybe doesn't necessarily vibe with the family atmosphere that Disney is, really known for. But, I could be wrong. It could have no strategy. And Jefferson has a great point. Disney's balance sheet is strong, and they are bringing back dividends. They are definitely, I'm just looking out. I'm looking out at a farther time horizon for Disney right now. And the reason why I'm doing that is because I bought my kiddo some shares of Disney. And so the time horizon on those shares is much more than a couple months, right? So that's what I'm looking at strategically.
So Scald, with the VIX staying below 17 still right now, are you doing anything specifically in your portfolio with options? Are you buying anything right now because of the low IV?
I've mostly been standing aside because I've not had the time during the day to day trade properly. And honestly, I'm not sure when I'm going to have the time. So I've been a little bit less heavy in options and day trading over the past several weeks, and I probably will be for the near future. So sorry I don't have all these juicy plays I normally get, but I've got other stuff going on.
No, I was just asking more for the crowd myself. I'm kind of a slow and steady investor myself more so, but just didn't know because I know the IV is so low. Sometimes there could be opportunities, right?
Yeah, I'm clearing out on MTB. Luce mentioned this. He mentioned 140 June. I bought 135 June. They are up bigly since earnings came out. So I'm looking at clearing out of these options today. Probably going to sell out.
I'm about to do the same. I'm about to roll over my puts. They haven't printed yet. The sideways market is fucking me up.
There's also we also got some commentary here in the crowd about the housing crash. I don't know, man. I don't know if housing's going to crash. I know everybody's saying that it's going to, but I know there is a lot of capacity coming online for rental properties, right? But I'm wondering if that's the market zigging when they should have zagged, right? Which is millennials are finally getting to a point where they're buying houses. And, you know, they're not going to need places to rent anymore. They're going to be looking to buy properties. So who's going to fill all of these apartments that are being rented? I guess maybe the millennials that aren't in the position to buy houses. But either way, I don't know enough about how rentals affect housing prices to have an opinion on that. I'd love to hear from somebody that does.
I just know the opposite side to that would be that, you know, if I look around from the millennial group, friends and family, I would say very few actually own. A ton of them are currently renting, and then even more are way too hesitant to even buy within these levels. So if they were afraid in 2020, 21 when the interest rates were low, they're even more afraid and disqualified even at these levels with the interest rates. So I think renting will still be pretty adamant across the board. But yeah, I mean, if there's less renters, then prices could potentially go down when people sell their homes that they're investing in. But you know, you could convert most of them into Airbnbs anyways. So, you know, I think the owners will still benefit.
Well, last week in the CPI numbers, actually rents dropped for the first time in 3 years. So that shows that there's some buying going on, if you will, if you look at it from that aspect.
Hey, for all those tuning in via Twitch and YouTube, unfortunately, I do have to go, but you can continue listening into this conversation on YouTube, so on Discord. So please feel free to check it out there. And so sorry for ending the stream early today. All right.